Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Aqil Haikal bin Ahmad Helmy, and this is my video for the sentiment analysis final assessment for ECON 4306. Firstly, I want to say that the objective of the assignment is to examine whether the news headline have a measurable impact on the company's stock performance. To explore this, I use our programming to combine financial sentiment analysis with daily stock returns. I have selected Yinson Holding Berhad, a Sharia compliant stock listed on Bursa Malaysia because it is actively involved in offshore energy and green technology and frequently appear in the media. Without further ado, let's walk through each step of the analysis. First, here, I load the R packages needed for this analysis. Each one support a different task. For example, the quant mode here pull stock data, send MRR here, handle natural language processing, and ggplot help me visualize the pattern. So we just run this here. Alright, everything is successfully loaded. This toolkit transforms the headlines and price data into something we can analyze meaningfully later. So we go to the second step here. Alright, so here now I fetch stock price data for Yinson Holding Berhad using get symbol here from Yahoo Finance. I'm working with adjusted closing prices, which account for dividends and stock splits. This gives us a realistic view of what investors actually gain or lose. Then, I calculate daily return percentage using the lag difference formula. These returns are what I will try to explain using the sentiment. Yes, here. So we just run this second step. Okay. So after we run this, and it also appear in the environment here. So we have set it. This gives us a clean data set of daily returns, a key input for our regression model later. So we move to the third step. Yeah. So before doing any analysis, I needed to collect real financial headlines related to my selected company, which is Yinson Holding Berhad. This step is vital because the quality and relevance of the headlines will determine how meaningful the sentiment analysis is. So to meet the assignment requirement, I gathered over 30 real new headlines from 2023 to 2025, which are way beyond the minimum of 15th headline. I sourced this headline only from credible Malaysian financial media, including the Edge Market, the Star, and the New Straits Times, as required in the rubric. All headlines are strictly financial here, as you can see here. Okay, all headlines are strictly financial or corporate in nature, and they covering quarterly earnings, profit changes, dividends declaration, debt issuance, major acquisition, and strategic expansion. I intentionally exclude general news, award, CSR event, and project launches to keep the dataset economically focused. This ensures that the sentiment analysis we run later will reflect actual investor relevant events that could possibly affect stock prices, either through expectation changes, confidence signal, or risk perception. Finally, I manually assign a date to each headline so that we can align the sentiment with daily stock return. This is important because the analysis depends on matching news to the exact trading day it could influence. So we just run the third step here. Oh, Bismillah. Oh. Okay, now that the headline are stored in the structured data frame, this will ensure that we will focus only on headline that could realistically impact stock prices. So we move to the fourth step, number 4 here. This is where we transform human language into numbers, a core part of the sentiment analysis project. I will use the sentiment R package to analyze the tone of each headline. This package works by assigning a numeric score to every sentence based on the presence of positive or negative word, punctuation, and context. For example, a headline like Yinson secured 300 million US dollar investment would likely get a positive score, while something like Yinson profit dropped to 22% would receive a negative score. The scoring is not binary; it is a continuous range. So stronger emotional language result in higher absolute score. This allows us to capture not just the direction of sentiment, but also its intensity. Since some days have more than one headline, I will also average the sentiment score per day. Here, 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 here. This ensure that if there are mixed headlines, say for example, one positive and one negative, the final daily score reflect the overall turn investor might experience that day. This step is crucial because it turns subjective, qualitative news into objective data we can use in statistical analysis later. So let's run the code and see how the headline are perceived emotionally. Uh, okay, now we have transformed raw text into data. This is a key part of the project, converting qualitative information into a quantitative variable that we can actually test. So we can see here if we take this here 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 show now we have transformed raw text into data. Okay, now we move to step number 5. So instead, step number 5, I merge the stock return data with the daily sentiment scores. But some trading days do not have headlines. So I use na.locf here function to carry the last known sentiment forward. This is a reasonable assumption, especially since news can affect sentiment for more than one day. So we just run here. Bismillah. Okay. We now a have a merged dataset with one row per trading day. It's showing historicity and the latest news sentiment here. Let me put this. Okay, here. These are the merged dataset with one row per trading day. It's showing historicity and the latest news sentiment. This dataset is now ready for visualization and regression. Now we move to step number 6. So after I've merged the stock return data with the new sentiment score, I'm going to visualize them together using a line chart. So based on this, I will say that on the left y-axis, on the vertical axis, I will plot Yinson daily stock return in blues. This shows how much the stock price went up or down each day in percentage term. On the right y-axis, I will plot the sentiment scores, but scale up by 10 so they can visually compare. On the same chart, this appear as a red dashed line. The goal here is not just to draw lines, but to look for any noticeable pattern or correlation. For example, do spikes in sentiment precede sharp price movement? This visual will help us understand whether financial headline might have an influence on how the stock performed the next day. It also it also fulfilled the project requirement, which is to use the plot tool to explore the sentiment retail relationship. So we just run here, Bismillah, and here is the graph. Uh, okay, here is the result of the chart. The blue line show the daily return of Yinson stock, and the red dashed line represent the scale sentiment score for financial news headline. We can immediately spot some interesting behavior. So, for example, around late May to June 2025, for example, there is a noticeable jump in sentiment score here, which is followed shortly after by a spike in stock return. This could reflect investor optimism reacting to headlines about improved profit or major investment. On the other hand, in a few cases like in 2024 here, we see the sentiment spiking upwards here, but the stock price declined the next day here. This might indicate profit-taking behavior or the market already pricing in the good news. So the purpose of this chart is not just to confirm one pattern, but to highlight that sentiment may be leading, lagging, or even contradicting price movement, which is why we explore the relationship more formally in the next regression step. This visual step is crucial as it lets us form initial hypotheses about the behavior we are about to test statistically. So we move to step number 7 here. Okay. Now I will run an OLS regression to test our main question. Does yesterday's sentiment predict today's stock return? So I created a variable called lag sentiment here to simulate a 1 day delay. So this can avoid look ahead bias. Then I run LM here to estimate the relationship. So we run this. So here is the result. Okay. So from the result here, the equation fitted is daily data equal to 2.01 minus 15.2 times lag sentiment here. You can see here based on the parameter est- estimated parameter. So we go one by one. For the intercept here, 2.0146. This is expected daily return when sentiment is zero. In other words, on a day with neutral news tone, the average return is about 2.01%. Is statistically significant with a p-value of 0.02.6 0206, so it contribute meaningfully to the model. So for the lag sentiment variable, which is our key variable, it show a negative relationship, meaning that when the news is positive, the stock actually tends to fall the next day. This may seem counterintuitive, but it's often seen in real market. For example, due to profit taking after good news or because the news was already expected and priced in. Importantly, the p-value is 0.01 here, which is below 0.05, so this result is statistically significant. That means we can confidently say the relationship is not due to random chance. So we move. So if we see here, the R squared here, this means that around 32% of the variation in the daily returns can be explained by yesterday's sentiment score. For financial data, this is considered decent, since markets are influenced by many unpredictable factors. And then if we look at the adjusted R squared, which account for numbers of variables, it is slightly lower, which is expected since this is a single variable model. So if we see here, the residual standard error is 2.50571, which tell us the typical deviation of actual return from the predicted one. Distribution of residual, which I will check in the next step, help validate whether this model is statistically sound. So the F statistic here, negative, wait, uh, the F statistic here, 7.543, and the p-value is 0.01434. This F statistic, this F statistic states whether the model overall explain a significant portion of relation in the dependent variable. Since the p-value is also below 0.05 here, which is 0.01, we can say that the overall model is statistically significant. So, so what does this mean in practical terms? This result suggests that investor sentiment, as measured by financial news tone, has a predictive effect on stock return, but in the opposite direction. For example, when news is overly optimistic, the market might respond by selling off the next day. Maybe because the price already reflects the good news or due to the short-term traders looking in the gain. This gives an interesting behavioral financial finance angle. Investor psychology may cause delay or even reverse reaction to sentiment, which we can capture through this kind of analysis. So to summarize what we find here, the regression confirmed that lag sentiment is a statistically significant predictor of next day's stock return for Yinson, and that the relationship is negative. Lastly, we will check the normality of the residual. A, a valid regression model should have residual that resemble a normal distribution. So we need to check whether we have normal distribution or not. Bismillah. Okay, here is the result. Let me zoom first. Okay. Here we have the histogram of residual. These are the differences between the actual daily return and what our regression model predicted based on the sentiment. The shape is fairly symmetrical, with most of the values clustering around zero. This suggests that our model is generally accurate in its prediction, with arrows that are not heavily skewed in one direction. There are few outliers, especially on the right here, which slightly reflect unexpected news or volatile market reaction on specific days. But overall, the distribution is reasonably bell-shaped, which support one of the key assumptions of OLS, that residuals are normally distributed. So why is this important? Because if residual were heavily skewed or has strange pattern, it will indicate that our model might be missing something, like a nonlinear relationship, interaction effect, or structural break. But in this case, the normality of residual tells us that our model is statistically well behaved. While this check doesn't prove the model is perfect, it gives us confidence that the insight drawn, such as the significant impact on sentiment on return, are credible and robust. This final step completes the technical validation of the model and help us move from result to interpretation with more confidence. So to wrap this up, I I already used a Sharia compliant stock Yinson holding. I also collected and cleaned real financial news headline. I ran sentiment analysis using the correct tool. I visualized and interpreted the result. I built a statistically significant regression model that give us meaningful insight. This project showed that with the right tool, we can convert financial headline into measurable variables and use them to make informed observation about market behavior. Thank you very much for watching. Assalamualaikum warahmatullahi wabarakatuh.